What's up, everybody? Welcome to Crypto Capital Venture. In today's video, we're going to be jumping straight into why I think the Bitcoin bull run, it has barely started. There is so much upside right now for this Bitcoin bull run, and that's very good news for Bitcoin holders, obviously, as well as altcoin holders. So hit the subscribe, hit the like on the way in, and if you're not a member in our intelligence system, check out our sale in the link below or go to cryptocapitalventure.ai. Listen, everything that I'm about to explain to you is based off of data that I have. So we're going to look at kind of three main things in this video. Number one is kind of the macro setup from just a straight up technical analysis pattern. Number two is, and most importantly, is the risk model that we have in our intelligence system and the data therein and what it's saying right now. And right off the bat, I want to explain something to you. If the Bitcoin top is in, I'm gonna say something. If the Bitcoin top were to be in, the flip side of the risk model basically says that right now, from where we are, if the top is in, then Bitcoin will bottom. If we're somehow entering some bear market, which I do not think is going to happen, Bitcoin from this risk model data, and I'm going to explain why, will bottom in like 5 to 7 months. So if the best of it is over, and if this was the bull run that just happened, and I'm going to explain why I don't think that is, but if it was, and Bitcoin's going to start just trending down into some bear market, well, 5 to 7 months of pain, maybe. And the reason why that is because you can see this risk score on Bitcoin at 53. We're going to dissect and show you post bull market what that means for Bitcoin price. First thing I want to do is set the foundation for the video, though, and I want to just kind of explain from the pattern perspective that we mentioned. That is the inverse head and shoulders setup that we have and we are still tracking. So when we take technical analysis patterns like this one, a multi-year setup, and then we start bringing into play on-chain data, which we're going to do, and then we start bringing into play proprietary risk models like this one, sitting at 53, which is a hold, we have, in my opinion, a lot of upside, and that is what this is showing. So we have still the inverse head and shoulders, and we've not really separated too far from it, and that's why I'm kind of bringing this up a lot. We got the throwback to the downside, and then we're pulling back up. But this entire move right now to its target, two targets, 130 to around 300, depending how you're measuring this, this entire move is just still chugging along. That's number one, and I think foundationally, just from a technical analysis perspective. Now, over the years, I've kind of come to this place where it's not enough, or at least for me, I want to get more data than just patterns and moving averages and charts. I want more data. So over the years, we started looking at on-chain data a lot on this channel. And so we have that set up foundationally, but then we do have MVRV, Z-score, for instance. This is something I brought up in a pretty previous video. So MVRV Z-score compares Bitcoin's current price to what everyone paid for their coins on average. It measures how far away the current price is from this average price using standard deviations. So, why does this matter? Well, history shows that extreme Z-score readings often mark major market turning points. High readings have called market tops, while low readings have signaled the best buying opportunities. Ask yourself, if you're a Bitcoin person, if you've been tracking Bitcoin, even if you've been tracking altcoins this cycle. Yes, we're hovering at all-time high areas. But have you seen some type of parabolic just blow off top that we've seen in previous cycles? Just greed just gets out of control. We're just way overextended, way overbought. Have you seen that on Bitcoin? I have not. But we have data that suggests, not only on the risk model we're about to look at, but on this chart that suggests this has not happened. So you go back, and there's going to be people right now that are kind of like, you know what? Right now, Bitcoin is just, it's about to put in this like triple top on, if we start zooming in on the chart, it's going to start looking like a triple top, right? And I'm talking about on the daily, 1, 2, 3. People are going to start talking about that. And we might get rejected here. I'm going to do some zoomed in analysis, but people are going to start talking about that. This is the top of the bull market. It's game over. But you go to a chart like this is not similar to previous bull market highs. That just parabolic move, the overextension, the greed has not entered the game yet. And I think there's many reasons for this being in play. But long story short, when we're zoomed out on this monthly chart, I have a note here, the longer consolidation base, because that's what's happening now. This is something that's never happened before, followed by a slow grind upward, not a parabolic move, suggests a more structurally sound and elongated bull cycle compared to explosive blow-off tops of past runs. So that's part of the thesis here on why I think Bitcoin has tons of room to go. But now let's really get into the bulk of the data, the really good data here. And it's the risk model in our intelligence system. And we have a bunch of risk models back here. We're going to be looking at the Bitcoin risk model. Right now, we have a 40% sale, everybody. I'm not going to be showing these charts throughout the entire bull market. Our members are going to be, getting this data as these risk numbers change. But right now, I think we're in pre-bull market territory, pre-parabolic move territory. And I'm going to be utilizing this data on this YouTube channel. And I wanted to kind of at this moment explain what's going on here. So you can see, and I'm going to talk about why, if it's post bull run and if the top is in, the time frame for when Bitcoin might bottom. But it's really the flip side of that. Why is Bitcoin different this cycle? Look at Bitcoin right now, sitting at a 53. We've gotten into this territory, if we start zooming in on this a little bit, where our first swing high, and here's just for context, January 2024, Bitcoin ETFs getting approved, Bitcoin starts moving, right? Typically, in previous cycles, and we have last cycle right here to 2020, previously that move will just lead to this parabolic run, overextension, high greed. And this is what happened last cycle, right there. And you can see Bitcoin in that first swing high getting into the 90s on our risk model, and then falling back down and putting in another swing high. And we didn't even get into the 90s or the 70s. We got to 77 in our proprietary risk model. Now, look at this cycle so far. We get into 50s or 60s, right? Which is just above where we are right now on the current risk score of 53. And then we just consolidate very quickly to the 50s, if not the 40s. So we are basically a little bit of a pump and straight into hold territory. No type of parabolic run like previous cycles. You can just go back previous cycles. No type of parabolic run, just falling right into hold territory from a risk perspective, and just months of consolidation, and even falling into the 30s back here in this September 2024 area. I mean, that is kind of like an accumulation area if you're looking at this, right? If we're starting to look at entryways into bear markets. And then we got another swing high to the upside. And similar story, right into the 60s, but very quickly falling into the 50s, falling into hold territory, and even falling most recently, very recently, into the 30s again. And this was the high tariff fear event. We have consolidation and just such a nice foundation for a Bitcoin bull run, multiple times being set up right now. All the while, the risk score just holding very steady at hold levels. All the while, on-chain metrics like this MVRVZ score showing signs that we've not even gotten to that bull run yet. And so it's weird because Bitcoin right now is at all-time high, or even right now as I'm doing this video, testing all-time high. But here's the deal. Let's give people that are saying the top is in the benefit of the doubt. And let's look at that. So let's go to previous cycles. Post Bitcoin bull run last cycle, Bitcoin falls, right? And we're falling, and here we are, here's 55, right? Maybe back then it's like, oh, please just keep going higher, similar to now, and then it doesn't, and we fall in a bear market. Well, that was March 2022, and the bottom was in not that much longer after that, November 2022. But you go to previous cycles, it was even shorter, really. So here is the bull run from 2 cycles ago. It's falling. There's a 54, very similar risk score than we are right now. So a post Bitcoin bull market score of around 53 is what I'm looking at. Well, this is what happened. July 2018, the bottom in December 2018. So like, what is that? 6 months or so of just some consolidation, and then boom, really, really tough month. And by the way, this was tariff fear, mark the bottom. Similar high fear event that we just went through, by the way. But notice, okay, that's how long that lasted at this risk score, 53 post bull run. Here we are again, 53 post bull run. This is 2013 bull run. And check it out. From this area, July 2014 to the bottom, we're looking at January 2014. So again, what is that? Like 6-7 months. So, and by the way, that's not what I think is going to happen here at all. But I'm just trying to say that's even how bullish Bitcoin is right now. If it's going to be that Bitcoin put in its top right now, this risk model is saying, you know what? Okay, it's going to consolidate maybe for 6-7 months. And you know why that's bullish? Because that just happened anyway, right? Bitcoin already did that. But notice the elephant in the room here in terms of this risk model is, and I should have prefaced the entire video with this. I hope many of you are still watching, but this is a ton of data on this risk model, but it's not a guaranteed thing, right? We can't just say absolutely Bitcoin needs to go crazy into these 80s and 90s and 100 area again for the bull market top. But when I'm bringing in all of this different data, it's very compelling for me. And that's why I think that the bull run is not over and there's plenty of room left. But with that being said, the elephant in the room is this cycle is operating completely different from a consolidation standpoint in such a healthy way. And so when we're waiting for that parabolic move that we've seen in all of these previous cycles, we can answer the one simple question: has that happened yet? And the simple answer is no, it has not. We're sitting at 53, and we have plenty of room to hit these levels to the upside. So then you go and you start looking at the weekly chart on Bitcoin, and you're kind of reminded of where we are in terms of all of these things. So the 2021 top is something I want to talk about. That happened at lower relative risk levels than the 2017 peak. But this cycle structure seems to be extending, likely due to macro shifts. So again, as I've mentioned on the monthly, ETF inflows, institutional adoption are huge players in this bull market. And I think that is why we're also seeing a little bit of a different structure. So yes, if we go back to the risk model to get to my point here, you can see Bitcoin didn't get as crazy as it did in the previous 2017 bull market. That hit 100. It didn't get that high in the last bull market. It got into the 90s, like 94 on this risk model. So that's not definitely to say that Bitcoin this cycle can't reach 90s or even 100 in this bull cycle. But I think what's being very strongly illustrated here as we look at this risk model, look at previous cycles, look at the structure and consolidation of Bitcoin, and take into account all of the macro things that are happening that have never happened in a cycle, I think it's at least safe to have an opinion that this bull market for Bitcoin has tons of upside. With that being said, I do want to kind of just go to the daily chart and maybe throw some caution on the short term. We have right now as I'm doing this video, this 50-day crossing above that 200-day moving average. We had a similar move back here. And just notice there was volatility for Bitcoin at that moment. Anytime we have any type of moving averages, of this extent, kind of making a move like that, I'm always interested to see if Bitcoin or crypto or whatever crypto we're looking at is going to test those moving averages. The reason why that becomes kind of interesting to me, a dip right now, I want to see Bitcoin explode. Let's go all-time highs. Let's enjoy that. But the reason this becomes interesting to me is because check out what we might have in play if we get rejected here. And it's very simple. You can see it. I can see it. It's a potential inverse head and shoulders. We might have a right shoulder bringing us back down into the 90s. And then we have maybe another try at all-time highs further down the road on this daily chart. Not crazy down the road, but maybe we need to get rejected here. People need to keep talking about the bear market. Interestingly enough, what will be happening on this risk model? If that's consolidating back down, I don't know. Maybe, I don't know what we'd fall to. Right now we're sitting at a 53, maybe back into the 40s. But just check this out. The data, if we just zoom out a little, is saying that Bitcoin on the macro is consolidating in ways in which it has never consolidated before. So if we start getting a dip, that's something to keep in mind, that this is kind of what Bitcoin's doing right now. It is steady, healthy growth of higher highs and higher lows. So those are my thoughts on Bitcoin. This is kind of why I think there's a ton in store for Bitcoin to the upside. And I should mention, if we got that inverse head and shoulders on Bitcoin, by the way, the target to the upside, if we just kind of look at this, is right around like I think it's 140-ish. So to me, that just becomes interesting because it would be crazy if we have this inverse head and shoulders, which is not set up just yet. We have to get rejected here for this to happen. But inverse head and shoulders, and that inverse head and shoulders, I'm very zoomed out on the daily, would be kind of like on this breakout throwback area of the massive multi-year inverse head and shoulders. So this is just an awesome setup from a technical perspective on these charts. But that's what I'll be watching. So yes, maybe some short-term volatility. Let's see what happens. But all the while, when I'm looking at Bitcoin charts, when I'm looking at all of the data, and I'm just kind of looking at what's happening on the monthly, on the weekly, and on the on-chain metrics and risk models, I think there's tons of upside. That's just my thought. That is just my opinion. I'm ready for it all. I think we all need to be ready for it all. And I think that's the best way to approach these markets. But I really do like having and kind of sticking to the data and having an opinion, right? It's okay to have a bullish opinion, I would say. So if you like these risk models, we have other altcoins back here. We have a bull bear arena. We have on-chain metrics back here. We have our exit planner, which is next level now that we have risk mode activated, where we're using the risk models for profit-taking strategies. If you like what you see, give us a shot. Hit the link below. Go to cryptocapitalventure.ai and get signed up. We have a 40% off sale going on right now as I do this video. So those are my thoughts today. Let me know your thoughts. Hit the subscribe if you're not a subscriber. If you enjoyed this content, please smash that like button. I'll see you in the next video. God bless.